Okay, this is Jim Smith from Gann Analysis, LLC. You can find my website at gannanalysis.net. And today I want to show you something with regard to WTI, but I'm going to start with the S&P and show you the seasonal change dates. The dotted lines are halfway between the seasons. You can see here we have the summer solstice and the fall equinox. You can see it more or less catches a turn. And where you have the circles, it seems to do a pretty good job. Obviously here it didn't work quite so well. It's not going to work every time, but you know the seasons can often call a turn in the markets. Back here it worked pretty well, and here it caught a nice high. So we do pay attention to the stock market, various markets, a range of markets will turn in sync with the seasons. As strange as that sounds, the seasonal change dates can cause a change in trend. So you sell off hard into it and you bounce back. It doesn't mean it won't take this out eventually, but it does mean that, at least a temporary low in sync with the spring equinox. Now, if that works with the seasonal change dates, it works on the idea that the Earth revolves around the sun 365 days. You divide that, or 360 degrees if you like. If you think about a complete circle, it's 360 degrees. Halfway around the circle is 180. You can also divide it into 90-degree increments and 45, which is roughly what you get. Mid-season turns are 45 days, or close to 45 degrees. Same thing, 90 degrees between the seasons, and it seems to work. Now, if you can accept this, that the Earth revolving around the sun, the increments or the seasonal change dates can affect the markets, it's not really that big a step to say that, hey, if Saturn is another planet is revolving around the sun, and you divide it into 45-degree intervals, instead of 45 days, obviously one revolution for Saturn around the sun is nearly 30 years, 29 and a half years. If you take that circle and divide it up into degrees, 45-degree intervals seem to hit a lot of turns. The circles on this for light sweet crude futures are showing you turn dates. And what I'm saying is I don't understand why it works. I'm just saying it works. And my clients knew about this before it happened. I told them March 2020 would give you an important low for oil. At the same time that a lot of fundamental analysts were telling you oil is going down to zero. It's going down to $10, $5, whatever. They were trying to outbid each other in being bearish on oil. They gave you the exact wrong advice at the very moment that you should have been buying it. Now, the sharp sell-off, I admit, it's like trying to catch a falling knife. You couldn't necessarily know, hey, what is the exact low going to be? I mean, it would have been nice if we'd found support on this Saturn planetary line at around $30. We took that out, so it was a little scary to get down here. But now that we're starting to move up, you have to realize this interval is working. So what is my point? My point is, back here in February 2016, at the very moment that we were making a low on this planetary line at $26, you had a lot of fundamental analysts telling you it was going to $10. I don't know if you remember the headlines back then. They were quoting a very well-known Wall Street firm saying it's going to $10. At the very moment, it bounced off the support line and boom, it took off. I think the same thing is happening now. If you get back above $30, it confirms a move back toward 60, 66, somewhere in there, maybe even higher. The point is, this is a long-term cycle. It's not a day trade. I'm not telling you that this day or the next day is going to be up. It's obviously something that's going to play out over time. And 45 degrees Saturn is just a very small increment within a 29.5 year revolution. So what you're really saying is this 45-degree interval could be very important for quite a long time to come. We may even rally into February of 2024. I think it's entirely possible. That's the next 45-degree interval. So the point is, the more sold off, the more oversold you get going into the turn, as you were here, the more likely you're going to have a pretty decent rally. You can see what happened down here. And the more overbought you are going into the turn, which we were back here, eons ago, it seems like a long time ago, 2008, it set up a pretty vicious slide. Now, a lot of people are put off by astrology because there's, the 800 number call here before you eat your cereal this morning, because you never know, there might be something bad happen if you eat cereal today. That's BS. That should not turn you off to these important intervals. I'm saying if something is working, you don't necessarily have to have a scientific explanation for why it works. At some point, we will know. There are vibrations in the universe, and somehow it's tied into the markets, all human psychology. We don't have to give you an explicit reason for why it works. The whole crux of science is to explain observations. It starts with Aristotle. You look at the observed phenomenon, and you check to see if it's validated. That's the whole basis of science. So I'm saying this is what I'm showing here now is based on science. And when people tell you on CNBC that you cannot time the market, they're not talking science, they're talking opinion. I'm telling you that if you look at something that it works so many times, you have to realize there's something going on. So if you don't want to believe in this, that's fine. You're just missing a trading opportunity. But this is really, really important. It doesn't speak to the daily trend or the weekly. It speaks to the long-term trend. Selling off into this cycle sets up a big turn. It means that oil is going to go a lot higher than anyone realizes. I would not be surprised to see you back up at this line here at $66. I wouldn't be surprised to see it up there in the next few months. But will it stop there? Well, we don't know. When it gets up there, we'll check it and see this is resistance, this planetary line of Saturn. So you have both the intervals. The vertical lines are giving you 45-degree intervals, which tells you when a change is likely to occur. The planetary line of Saturn is telling you, hey, this is support. It offered support back here. It took it out here, but you get back above this line at $30. Maybe you go to 66. If you do that, you take that out, maybe you go to 103. So it's really, really interesting how this works. And there are a lot of people that roll their eyes about astrology, and I don't blame them. But I'm just saying, keep an open mind, look at what works and what doesn't work. If it works, then use it. It seems to work pretty nicely. Within the last few days, people are suddenly realizing this might be a low. If you were talking a few weeks ago or a few months ago, nobody would have believed that. And yet, when we sold off hard into this, I knew that March would probably be a low. It basically is doing the same thing we did here. Selling off hard into an interval, setting up a rally to follow. So this is really a great illustration of why you want to pay attention to the 45-degree Saturn intervals. So mark on your calendar, if you will, February of 2024. That's the next one. And just, remind yourself to look at oil in February of 2024 and see what it's doing. If it's rallying hard into it, might be another high like this one. If it sells off hard into it, maybe it's another higher low. We'll see. But I just wanted to give you this quick example and show you that, hey, there are things that you don't understand. That doesn't mean they're invalid. Who knows why this works? I just know that if you look at it and you observe all the time it hits, you know it's working. Good luck in your trading.